Okay, so let's have a look at the fifth adjustment for the 2020 Sole Trader question as Heighway. So we're talking about buildings are to be depreciated at a rate of 2% on cost. Land at cost was 500,000, so you need to take away the 500,000 from our cost because land doesn't depreciate. And then from that then we need to calculate what goes into our revaluation reserve because our land and buildings are revalued to 90,000. So just on that one, there is a previous adjustment on in relation to VAT. So our buildings is going to be 782,850. That's just taken from this adjustment. Our land, as we said from the question, is 500,000, I think it is. So 500,000. So you need to take land away from our land and buildings. And that's going to give us a figure that we're going to calculate our depreciation on. So the buildings are worth 282,850. And from that then we're going to calculate our depreciation from the question itself. So depreciation is worth, rate is 2%. So we're going to multiply that then by 2. And that will give you your depreciation then for this year. That will go into your profit and loss account as your expense. So 565,000 is our figure. So the depreciation on buildings, remember there's an adjustment to take VAT out of our buildings account. I think it was part of adjustment 4 or the previous adjustment. Then we need to take our land away from our buildings. So 782,800, take away 500,000 will give you 282,850. That's the value of our buildings and the rate of depreciation is 2%. So 565,657 is our expense figure to go into profit and loss account. Then the revaluation then, so it tells us that at the end of the year we revalued our land and buildings at 900,000. So you need to find out what is the increase. So our new value is 900,000. The value on our buildings at the moment is 782,850. So the increase in value then is going to be 1,117,150. So three figures to make up the revaluation reserve is going to be the increase in the value. You need to have your depreciation that we have paid so far. So our cumulative depreciation on our land and buildings. So our buildings cost 795,000. They're now worth 770,000. So there is depreciation of 25,000 that we paid on that from the start of the year. And then because we revalue at the end of the year, we need to include this depreciation that we have for the year as well. So those three added together will give you your revaluation figure of 147,807, and that's going to go into your finance by section in your balance sheet. So when you revalue something, three figures we need, especially if it's at the end of the year. So we need to have the increase in the value. So that's the difference between what we revalued our buildings to and what is the value of our buildings. So remember, you're going to take this figure, okay, from the adjustment, not the figure from the trial balance. This figure here. So remember, that's been adjusted at 795,000 has been adjusted as part of a previous adjustment in relation to VAT. So the new value is 782,850. Take that away from the 900,000 will give you the increase in the value of our buildings. We also need to take out the depreciation we've paid so far. So we're going to add that up, and then the depreciation then for this year as well. And that will give you 147,807. That goes into your finance by section as part of your balance sheet.